In today's episode, we're going to be focusing on the Pi Cycle Top Indicator and dissecting three particular periods in the Pi Cycle Top history and parlaying that in with the 4-year cycle, trying to see and understand the similarities in Bitcoin's price action and parlaying those similarities and recurring themes in the Pi Cycle Top Indicator in today's price action. So let's dive right into today's video about the Pi Cycle Top Indicator, and subscribe to the channel for more videos like this in the future, and like the content, like the video if you enjoy content like this going forward. So the Pi Cycle Top Indicator, a really interesting indicator because this is the orange 111-day moving average, and we tend to see very similar price behavior relative to this Pi Cycle moving average, and it really does tie in with the 4-year cycle. And so if we really just zoom in to 2015, we'll see that we see during the bear market bottom of 2015 an accumulation range and lots of oscillating around the 111-day moving average. Rejection here being a resistance, rejection, then a successful retest, and then overextension, loss of support, and then break back above it. And when we break out from this accumulation range, we hold as support, and the bull market just continues towards the upside. And this is the 2015 year. So candle 3, the macro accumulation range here, which we see in 2015. And this is a very similar year to 2019 and even 2023 in the respect that these are all macro accumulation ranges. And during this time, we tend to see a lot of oscillation around the 111-day moving average on the Pi Cycle Top Indicator. This is now 2019, successful retest here, holding, loss of support, deviation, break back above it, and holding. And as long as it holds as support in 2019, then we see further upside. And that's really important because holding the Pi Cycle Top moving average as a support is what enables this green candle to form and those rallies to local tops. And this is currently the Pi Cycle Top Indicator in this 2023 cycle. This was the bear market accumulation range. We broke out from and beyond the Pi Cycle Top moving average, retested it as a support, and here brief deviation before rebounding back above it. Here once again a brief deviation, and if we have resistance here, which is around the 28k region, that's where the resistance is located. That's going to be a problem for Bitcoin because we could see lower prices below the Pi Cycle Top moving average. But historically, whenever you think about the past, what we've seen in the past is that anything below the Pi Cycle moving average in a candle 3 in the 4-year cycle, that's essentially outsized buy-side opportunity. It's outsized buy-side opportunity whenever we're below this orange Pi Cycle Top moving average. And then when we break beyond this candle 3 of the 4-year cycle, we just hold it as a support until new all-time highs. And once again here, 2019, we lost it going into that candle 3. And then once we've been able to reclaim it as a support going into those bull market years, we just held support successfully and then broke to confirm a new bull market, or at least bear market. So once we're able to reclaim this Pi Cycle moving average as a support, we'll see new highs in those that bull market year, in those bull market years, and will not drop below the Pi Cycle moving average. And that's a really key takeaway to mention here, that as price ascends in a bull market, it doesn't dip below the Pi Cycle moving average. But because we're in this macro accumulation phase, we're going to see lots of oscillation around the Pi Cycle before we finally, for the very last time, successfully retest it as a support before continuing into new highs. Right over here, again, successfully retest it here, and here in 2015 we've seen price successfully hold this Pi Cycle moving average quite well throughout the bull market. And that's something we're going to be seeing later in candle 3, or at least in candle 4 and in candle 1. Those are the years where we're going to be retesting successfully in a new uptrend the Pi Cycle moving average. And that's going to be supporting the uptrend. However, in candle 3, we're going to just see lots of oscillation around that Pi Cycle moving average, trying to affirm support for that very last time, like we did in 2019. like we did and will do in 2023, the current level is 28k. That could be a resistance still, and if we do reject from here, then we'll see lower prices, and that's still downside outsized opportunity for the long run. But at some point we will reclaim 28k as a support and enable the next bull trend into candle 4 and candle 1, which lie ahead in 2024 and 2025. So how does this translate into today's price predicament? These are the bull market EMAs currently acting as a resistance. We know that from previous videos. And we see that the upper moving average is 27,600. And we spoke about the pi cycle being 28,300. So that essentially assumes that the pi cycle is around this lower high resistance. So approximate confluence in this lower high resistance that we've seen loads of FOMO wicks beyond before ultimately rejecting into a crash. So the pi cycle 111-day moving average resides near this lower high resistance, which could reject price should we be able to even overextend beyond these bull market EMAs. And you can see this upside wick tried to overextend and even reach for that lower high resistance, but failed in the end. These are acting as a resistance primarily before we even get to that pi cycle moving average. So if these keep acting as a resistance, then we'll probably drop into 26k once again into this region, roughly speaking, and that's going to be the key validation point for further downside, because remember, is this a potential double top? It's still not clear. We haven't distorted this potential double top just yet. Something to really watch out for going forward, this 26k region. But the key thing to mention is that anything below the pi cycle moving average is an outsized opportunity. We'll still see lots of oscillation around this 111-day moving average in this candle 3, as we tend to see in the past. But once we get to that point where we're in a candle 4 and candle 1, the pi cycle top is going to be supporting the uptrend going forward. So until the pi cycle top is able to reclaim this level, that's going to be a bullish signal, but it's also going to be quite difficult to fully hold this as a support until we get into candle 4, and watching for support retest here in candle 4 would probably be one of the safest and more confirmed signals that we might be emerging into a new trend, holding this pi cycle as a support and then emerging into a new uptrend. But in the meantime, could we see a bit more short-term bearish price action? There is a bearish fractal currently forming on price, and you can learn more about that in that video right here in the top right hand corner, and I'll speak to you in that one.